All right, good day, family. I'm just going to do a quick analysis as to why I went long on Euro CHF. We will have more in-depth videos, and you will come to understand this, this video on another level. Um, so, when you first looking at the market, you want to find key levels, right? And one thing that I use is the line chart. And what I noticed here was that the market, if you draw a line right here, the market rejected this area twice. And you see how it came down, broke it, and retested as a resistance. So this is an area where if price hits this area with a key reversal pattern, I would be looking to pull the trigger, which I did today, caught about 50 pips. And let me just put in some arrows. Where arrows at? Okay. We got one hit here, just so you know, we got one there. And as you see, price was hit multiple times in this area. And what I usually do is I put it back to the candlestick chart. And I don't like to look at a key zone area as like just a line. I draw a box and I just look at it as this overall area is where I would be expecting some reversal. So as you see what happened today, it did retouch this area. On the line chart, that's where it closed. But one thing I want you to use, which is useful for me at least, is notice that it threw a wick down and it looked like it trapped short holders, right? Now, one way for me to catch a good retracement is a tool called a Fibonacci retracement. And, once you understand when you're dealing with financial markets and price action, if it's in an uptrend, it's not just going to continue going up. It's going to do a slight retracement each time, slight retracement, and doing higher lows, and then it's going to continue in the uptrend. So what I did here at the time live now, don't look at that with live, you draw your Fibonacci tool from the low to the highest point right here. That's what I did. And you would see the 50% and 50 and 61.8, which is like a percentage of the retracement. So you could actually catch a more precise entry without getting stopped out. So I drew this out before it even retraced down. And one of the best retracements are to the 61.8, especially in line with the zone and the moving averages, which we will go over in the future. But I'm just showing you here. I pulled the trigger right here on this W formation. If you can't see it, that's a W double bottom on a 15-minute chart. And you see that, notice the wick and the rejection of a 61.8. And this could look like some level of bank manipulation, because now anytime banks need to place a massive order, they need to trap dumb money, which is us, because the banks are the smart money. We are the dumb money. And if you notice how the market came down and actually touched the zone as a resistance. So if you're looking at this live, this was actually a trap. And then you just see a big move shift against it, which helps you know that that was actually a trap. But I'm making it really simple. It's a lot of other factors getting into this, but the W formation rejected the 61.8, and I was already expecting a retest to my zone. So I placed a buy right here, and I had my take profit to this moving average, and it just wicked right up there. And, I just got in and out of the trade. So just to keep it simple, The reason I was even looking at this was because it was in a key level area. And that's something that you want to, the main thing is to know what a zone is, how to find a zone, you know, and to wait for a nice breakout and retest of that area. I wouldn't buy here. I would wait for a retest, and the Fibonacci retracements with zones and the moving average cross helps you to trade in line with a trend. So hope that helps. We'll have more in the future.